Good afternoon, everyone, and welcome to Stock Market Today for Wednesday, March 5th. We're trying to bounce in the market with positive reaction here to tariff talk. Some more updates as those headlines progress there, and investors reacting favorably, at least for today. And here now to discuss the market action and a couple of stocks to watch is my colleague Ken Shreve. What do you have for us today, Ken?
Yeah, pretty good first day of a rally attempt for the S&P 500. So we'll kind of hard finding setups out there, but that's not surprising since we came in pretty hard. But let's take a look at Cloudflare, NET. This is a big market leader that is still showing potential here in the insurance group. Want to take a look at AON, and then another tech stock, Doximity, DOCS.
Okay, we'll take a look at those stocks, but first let's analyze the major indexes and the overall market tone at this juncture as the major indexes try to find support at long-term support levels like the Nasdaq here closed below the 200-day line in Tuesday's session, back above that level today with a gain of about 1.5% into the close. In the S&P 500 up 1.1% on the day, finding support at the 200-day line. Meanwhile, the Dow up 1.1% on the day, also battling back after recent sizable declines. And then the Russell 2000 up 1% on the day, but barely making a dent here, Ken, as small caps look very weak and damaged here. But what do you make of this rally attempt so far at some pretty critical levels?
Well, we always want to just kind of pay attention. I know people have different opinions on volume, but when you see the market, coming down in heavy volume, you do as it starts to rally, you do want to see at least some signs of conviction behind the buying. That's the whole concept behind a follow through day and how indexes can confirm a new uptrend. So the rally came in very, very light volume today, not only on the NASDAQ, but on the NYSE. I will say our senior market strategist, Mike Webster, this morning on IBD Live noted that the down session for the NASDAQ on Tuesday, where it fell a little further below the 200-day line, but held that 18,000 level. The fact that the Nasdaq closed just in the upper half of its range would qualify it as a pink rally day. So we're looking at the second day of a rally attempt here for the Nasdaq Composite, only day one for the S&P 500. So bottom line, we're still in the very early stages of a rally attempt here, as Bill O'Neill and How to Make Money in Stocks writes that the first 1, 2, 3 days of a rally attempt, you don't want to put a whole lot of faith in it because that can often be short covering, and there was likely some short covering today. So we'll take the nice percentage gains here. We are not yet aggressively invested on leaderboard, still taking it very cautiously here after quite a sell-off in a lot of leading growth stocks.
Absolutely. So, in order to see more evidence of a turn in the tides here, we want to see this low to hold and then a couple of days of progress and hopefully volume increasing versus prior sessions to give us a little bit more evidence that institutions stepping back in, stepping up, supporting the lows here. So, we'll have to see if we can get that evidence in the coming days in this topsy-turvy, news-driven, headline-driven market, Ken.
Yeah, most definitely was interesting to see stocks were able to rally. The catalyst was that apparently these auto tariffs on cars coming in from Mexico and Canada are going to be delayed by a month. Apparently, the big three automakers in Detroit, told Trump that this would really cause a lot of sharp price increases in auto. Some said that auto prices could go up 25%. So he delayed those auto tariffs, and that brought some buyers in from the sidelines. But again, we'll see if the short covering runs its course here. We've got a big jobs report on Friday, of course, so a couple more days to go until that. And the Fed has really been keeping a close eye on the jobs market. We did get a not so great job reading seeing today with the ADP private payrolls came in much lower than expected. We've been seeing some softness in the labor market, and right now this sharp pullback for the Nasdaq down to that 200-day moving average is concerns about a slowdown for the U.S. economy in the second half of the year. And I think the market is still trying to figure out the impact of tariffs and if they are going to fuel that four-letter word on Wall Street, stagflation. Not a four-letter word, but the market is not going to like a stagflation environment where we have inflation that stays high and economic growth that
Mhm.
starts to slow.
Absolutely. Okay, let's analyze the S&P 500 as well. Finding support at the 200-day line, a long-term support level here. So very key in terms of the overall long-term uptrend's health to find support around this level. So that's why the Nasdaq looking a bit vulnerable. Good to see it getting above that level today. The S&P 500 so far holding the 200-day, but it wouldn't take much, Ken, to send us back below that level, but an encouraging first step today in a rally attempt.
Yeah, exactly. And if you were really itching to put some money to work in the market today, I mean, when we're in a correction, we our methodology favors a pretty heavy cash position. Kind of get out of the market's way, wait for the institutional selling to run its course. But even if you were in the mood, much of the strength in the market today were in these Chinese stocks. Those were some of the biggest percentage gainers. You saw a big move for KWeb, but not only a lot of Chinese ETFs, but a lot of stocks, just growth stocks in China. A lot of big internet giants setting up in cup with handle bases. So we'll see. But new buys, again, when you're looking at names like the former leaders, like an Nvidia or an AppLovin or a Palantir, these stocks are just not in buy areas at this point. So you want to wait for the setups to kind of present themselves. That sometimes can take a little while. So not in a rush to go right back into the market here. Need to see the indexes prove themselves a little more.
Absolutely. Okay, let's get quick thoughts on blue chips and small caps. So here's a look at the Dow, Ken.
Yeah, just the first day of a rally attempt. We saw the S&P 500, making a good test of that 200-day line. The Dow didn't even get down close to that. It got down close, but didn't. Still holding above it. First day of a rally attempt here. And then the Russell 2000 that we looked at earlier, just really in a world of hurt here. This is an example of just an index that's been under some pretty serious, distribution on a sharp downtrend, seemingly breaking uh, down below prior lows. So really, we'll wait for some follow through in the Russell 2000 as well, but definitely the weakest index at this point.
It sure is. Let's check in on the bond market. Here's the 10-year treasury yield. Ken, what do you make of the action here?
Well, as I talked about on IBD Live this morning, Ali, we're looking at a bond market that is very overbought and a stock market that is showing, quite oversold by many indicators. So here's that TLT. If you're long the bond market, you're long TLT, and this is, again, something ETF that is starting to look a little overbought here. Came up to that 200-day moving average, and then yields have rallied the past 2 days because TLT has gone down. So we'll see if that 200-day line ends up
Mhm.
being a resistance level. Sure looks like it is right now.
Okay. And gold miners still very much in focus here. GDX, the gold miner ETF, had a great day today, up 3.5%.
Yeah, we've got some pretty good exposure to gold in the leaderboard model portfolio. Yeah, just taking a look at GDX, this is in a decent setup here. This is another example of a cup with handle base. Pretty clear entry here at 42.66. So who knows? Maybe today was a setup day that could bring in some more buying tomorrow. Obviously, the U.S. dollar has been quite weak. A big plunge today. That's been helping. The weak dollar's been helping gold stocks. And yeah, as Ed Carson, our news editor, pointed out this morning, this is a precipitous drop. You normally don't see a 3-day drop like this for the U.S. dollar, but
Yeah,
here we go.
is this a crypto chart here that we're looking at, or is this
Yeah,
the
I know.
dollar?
I know yeah, it's 3 days of fairly sharp declines, but since gold is priced in dollars, it tends to help
Mhm.
gold when the dollar is weak, and certainly seeing gold still outperforming here.
Absolutely. Okay, well, let's take a look at some notable stocks, starting with Cloudflare, which you mentioned. Can NET up 2% on the day, fighting support at the 50-day line. Enterprise software, this is a growthy area. So it seems like for the market turn, we want to be looking at growth stocks that are holding up and finding support where we want to see.
Yeah, there's been quite a bit of destruction in the enterprise software group. There's a lot of stocks, a lot of former leaders that have broken through key support levels. So we're always interested in names with top fundamentals like Cloudflare that are still holding support. And this was a pretty pretty sharp pullback. Did so in some heavy volume. But yesterday on Tuesday, it closed up near its session high and extended gains a little bit today. So we're watching this one, see if it can base out here. But it is also, if you look at the weekly chart, really looking like a good test of the 10-week line. Now it came down to the 10-week line a few no, several weeks ago, kind of cleared a short consolidation exactly right in that area there. So when a stock finds support at the 10-week moving average, you want to see, uh, even if it's a down week, you want to see that weekly close in the upper half. And
Mhm.
so far, so good. Cloudflare making a good case for support here.
Yeah, absolutely. And a quick look at the monthly chart here, even with a strong start to 2025, not quite yet at its prior all-time highs from 2021, that sort of time frame. It had a great move out of the IPO base, Ken, when it went public in 2019, 2020, but making another move. So who knows if this market can get back on track and investors start feeling more bullish about risk on areas of the market. It feels like enterprise software is an area that came out relatively unscathed in the aftermath of the DeepSeek AI news. Of course,
Hmm.
getting dragged down here with the broad market weakness, but this could be an area to watch.
The group has still been able to maintain a very high ranking in our industry group rankings. We rank 197 groups based on 6-month price performance of all stocks in the group, and you can see, even though we've seen some selling among some leaders in the enterprise software group, the group is still up number
Mhm.
21 out of 197. So still showing a lot of strength, and Cloudflare, one of the better performers at this point.
Okay, let's check out AON. This is Aon in the Insurance Brokers Group, a recent breakout that we pointed out a couple of weeks ago. This shift more towards defensive areas with a lot of standout names in the insurance space, and Aon among them.
Yeah, and again, when you just look at the bottom of this daily chart here, and you look at recent quarterly earnings and sales growth, the company's still churning out respectable growth. The insurance sector is a big sector, so this is Aon is tracked in the brokers group, and really like the setup here. Back to the daily chart, it was a nice heavy volume breakout from that cut base, and it's been a pretty gentle pullback. Particularly like the way the stock traded today. It gave back a little bit of ground, but closed up near its high, not that far extended from that 395 pivot, the left side high of the cup. So people looking for some insurance exposure. This looks like a reasonable name. Mention names like Brown and Brown, BRO, some of the big leaders, and this is also an insurance broker. This one, performing very well, right at the top of the 5% buy zone. Progressive as well, not an insurance. Broker, but another stock that is holding gains well after a breakout. So, money definitely flowing into the insurance stocks here. Maybe a defensive play.
Mhm.
So we'll see if they can, continue their market leadership. But setups
Yeah.
still look pretty good here.
Okay, and last but not least, let's head to the computer software medical group and Doximity, the ticker here, DOCS, up 2.5% on the day. A couple of weeks ago, a very impressive breakout for the stock on earnings in early February. Shares up can 36% on the day. In the following weeks up until now, a relatively orderly pullback.
Yeah, that's why we put it on the leaderboard watch list. Still think this one has potential to be a leader, similar to Cloudflare. Kind of an orderly pullback here. Again, yesterday on a tough day for the Nasdaq, this one fell but closed up near its session high. Rallied in light volume with the market today. We were kind of hoping that DOCS on the weekly chart would come down and test its 10-week moving average. It was almost a test. I mean, we could call it a first test in spirit. Didn't quite touch the 10-week line, but orderly pullback and finding support just above that 10-week line. So this is another stock that made a nice move when it initially broke out over that 20 level. It's quadrupled. Still showing good technical action here amid pretty good fundamentals.
Okay, well, three stocks to watch there. Thank you, Ken, for putting those on our radar. We appreciate it.
My pleasure.
And thanks everyone so much for tuning in. That is it from us for today, but we will be back with more tomorrow morning on IBD Live, starting 10 minutes before the opening bell. Investors.com/IBD Live for all the details on that. And it's Wednesday, so we do have our weekly Investing with IBD podcast hosted by our very own Justin Nielsen. That's today live at 5 p.m. Eastern. This week's guest is Dan Fitzpatrick, founder of StockMarketMentor.com. Looking forward to their discussion. What is Dan seeing in the current market? How is he trading it? And where could we go from here? Well, tune into the podcast to find out. So we'll see you then, everyone. And we'll see you right back here tomorrow after the close.